to you, and thank you for joining us here this morning. Distinguished delegates, ladies and gentlemen, may we greet you all in the Balinese way of Om Swastiastu, which is a prayer that means may health and prosperity are always upon us. Assalamualaikum warahmatullahi wabarakatuh. Good morning and welcome to the Bali Nusa Dua Convention Center. And first of all, we would like to greet our guests of honor. The Minister of Finance of the Republic of Indonesia, Her Excellency Ibu Sri Mulyani Indrawati. ASEAN Working Committee Financial Inclusion Co-Chair, Ms. Malini Savana. Chairman of the Fiscal Policy Agency, Ministry of Finance of the Republic of Indonesia, Bapak Febrio Nathan Kacaribu. Chief Executive of Market Conduct Supervision, Education and Consumer Protections of the Financial Service Authority of the Republic of Indonesia, Ibu Friderika Widyasari Dewi. Senior officials of the Ministry of Finance, Financial Service Authority, and Bank Indonesia. Honorable moderators, speakers, distinguished participants, ladies and gentlemen. This morning, we are very delighted to greet and also welcome you all to the ASEAN Finance Ministers and Central Bank Governors Meeting 2023 High-Level Dialogue on Promoting Digital Financial Inclusion and Literacy for the MSMEs. Distinguished delegates, ladies and gentlemen, as the fastest growing market in the world, ASEAN digital economy is projected to grow significantly. Digital literacy and also financial literacy are both critical to raise financial inclusion and also enabling ASEAN's digital generation to navigate financial services safely and seamlessly. Presenting you our speakers, which are the high-level policymakers from ASEAN member states, industry leaders, as well as prominent speakers from international organizations. This dialogue will provide you opportunity to share insights, experiences, and also good practices, as well as showcase policies, programs, and products and services to promote digital financial inclusion and literacy of the MSMEs in the ASEAN region. As in Indonesia, we recognize one proverb known as tak kenal maka tak sayang. Or we may say it in English as we will be able to share vision, mission, and also dreams with a person if we know at least the name of the person. So please allow me to introduce myself. My name is Dian Ariswari, your MC for today. And now, ladies and gentlemen, without further ado, we will start the dialogue by welcoming the ASEAN Working Committee Financial Inclusion Co-Chair to the stage as she will deliver a welcoming remarks. Ladies and gentlemen, please welcome Ms. Savannah.
Excellency Ms. Lee Muyani, Minister of Finance of Indonesia, distinguished speaker, ladies and gentlemen, good morning. Welcome to the high-level dialogue on promoting financial inclusion and literacy for MSME. As the co-chair of the WCFIN, I'm honored to be here with you today with the distinguished speaker and participants from across the regions, who share a common vision on advancing financial inclusion through digital innovation and literacy, especially for the MSME. The financial inclusion is one of the priority issues in the ASEAN economic development. To further promote the objective of financial inclusion, Indonesia, as this year ASEAN co-chairmanship, has included this agenda into strategic thrust of digital economy in order to promote the digital financial inclusion and literacy, and to provide the opportunity for the MSME to access to the financial services. Thus, this event is conducted at the platform to promote exchange of good practice on digital financial inclusions for the MSME. Excellency, the ASEAN region is home to dynamic digital financial generation that is driving economic growth and social development. According to our statistics, more than 70% of ASEAN population are internet users, and more than 40% are active e-commerce shoppers. However, there is still a significant gap in accessing to the financial services, especially among the MSME. Regionally, the MSME contribute to the 85% to the employment, 84% to the GDP, and 18% for national export. This figure showing that MSME play a crucial role to the economy and social development, contributing to the value-added activity, innovation, and inclusive growth, to the creative job opportunity and their widespread presence to both urban and rural areas. At the same time, the digital financial services play a crucial role to offering convenient, affordable, and secure solutions for the MSME to manage their finance, access to credits, and so on. However, financial services also pose the new challenge and require appropriate policy and regulatory response, as well as enhance digital financial literacy among the MSME and consumer. For Working Group of ASEAN Financial Inclusion, in order to promote this work, we have developed policy note on digital financial literacy for ASEAN, and also the report on advancing digital financial inclusion as the guidelines for ASEAN's members. I understand that the digital financial development will not stop today or in the near future, but it will keep continuing developing. That is why the dialogue today is timely and relevant. It provides opportunity for us to exchange views and experience on how to foster an enabling environment for digital financial services development in ASEAN, while ensuring the consumer protection, financial stability, and inclusion. It also allows us to learn from the best practice on how to promote digital financial literacy among the MSME through effective strategy, tools, and partnership. I hope that the dialogues will inspire us to take concrete actions to advance digital financial inclusion and literacy for the MSME in the ASEAN. Together, we can leverage the power of technology to create more inclusive, resilient, prosperous region in the digital era. Let me stop here. Thank you very much.
Thank you so much, Ms. Savannah, for the insightful welcoming remark. Ladies and gentlemen, this high-level dialogue will precede the ASEAN Plus Free Finance and Central Bank Deputies meeting and ASEAN Finance Ministers meeting that will take place on the 30th and also 31st of March 2023. It will be also followed by a workshop on promoting digital financial inclusion and literacy for the MSMEs tomorrow here at the 30th of March 2023. And now, the Minister of Finance of the Republic of Indonesia will also deliver remarks. Ladies and gentlemen, please welcome Her Excellency Ibu Sri Mulyani Indrawati.
Terima kasih, Dian. Honorable Ms. Malini Savannah, all my dear colleagues from Ministry of Finance, OJK, Ibu Frederica, yang saya belum lihat di sini, and all distinguished guests, ladies and gentlemen, very good morning to all of you. It's really a pleasure for me to be here as a finance minister with all my colleagues, hosting you together with Financial Service Authority, OJK, to this very important meeting. We are discussing two very important topics. First is the MSME, the medium and small enterprises, which in many and almost all countries play a very important role. And the second one is the digital technology. I do hope that the dialogue today will also provide a very important contribution to ASEAN member countries within the context of developing digital technology to create financial inclusion for small and medium enterprises. Ladies and gentlemen, we all know that MSMEs play an essential role in boosting economies, creating jobs, and also creating an opportunity to make a progress in ASEAN region. As mentioned by Ms. Savannah, the MSME is playing a very important role in creating jobs, absorbing about 35 to 97% in the ASEAN region countries, and contribute around 35 to 69% to the gross domestic product in each ASEAN member countries. MSMEs also a very important role in Indonesia economy as the largest economy in the ASEAN. As MSME contributing 61% of our GDP and creating job for 90 or 97% of our workforce in Indonesia. So their role is definitely very, very significant. How they are going to make a progress and how they are going to also create a more productive activity within small and medium enterprises will depend on the policy, but also it can also create a very significant impact for each of the ASEAN member countries' economy. The digital technology and the development of digital economy, especially after the pandemic, 3 years of the pandemic, creating a very important opportunity, not only for each country in adjusting the way we work, but also in the region and especially true for the small and medium enterprises. ASEAN digital economy alone is projected to increase significantly by 2025. After the pandemic COVID-19, the impact of this digital economy is even more important. Digital economy, in fact, is become a game changer for many of the countries or economy. The digital economy created an accelerated use in the form of accelerated use of money, mobile money, fintech services, and online banking, providing great opportunity and tools or services for small and medium enterprises to advance. The technological development and innovation in the financial inclusion through digital services has improved and deepened the financial sector, and also at the same time improve public access to formal financial product or services. But given this very delighted and welcome progress, there are still challenges remain. Financial exclusion is still a major hurdle and also a critical factor in our economy, in many ASEAN countries' economy, especially how to include the small and medium enterprises' involvement and participation. Several ASEAN countries still have low financial inclusion index, which relatively showing a huge gap among countries within our regions. According to Global Findex 2021, this is the index produced by the World Bank IFC, there are still widespread disparity in the financial inclusion indexes of the ASEAN member country. They are ranged from only 3% of the financial inclusion to the highest for our member country at the level of 70%. The average is 41%, doesn't say anything because the very wide range of this inclusion index. In addition to the lack of access to formal financial services, which provide also a very important challenge, achieving formal financial services access alone would be a story of success for micro and small enterprises, which is the highest or the most important role in the economic activity, especially also in Indonesia. So financial inclusion for small, medium enterprises, MSME, is one of the most important agenda priority in the economic of the ASEAN as well as here in Indonesia. How we are going to develop digital ecosystem in the context of empowering small, medium, and micro enterprise would also further achieve or create an opportunity for achieving sustainable development goal. Reducing poverty, creating job, and also creating an equality definitely will depend on this financial inclusion. Given that background, promoting financial inclusion and literacy for medium, small, and micro enterprise in ASEAN is a strategic step and also an important part of our ASEAN digital economy framework. Taking into consideration the rapid digitalization in finance, acceleration of the digital ecosystem, the digital payment and economy or platform in this case, will certainly improve financial inclusion. It will provide MSMEs greater access to finance, as well as also increase their opportunity, economic opportunity, to reach to the market. Digitalization will also provide MSMEs the opportunity to upgrade their skill and capacity. The innovation and acceleration toward digital economy and digitalization is vital for more productive and inclusive growth for small and medium and micro enterprises. Through digitalization, MSMEs can read data digitally, digitally and also utilize the digital platform to enhance their business, to reach a much wider market, explore more product, and understand the risk and optimize their wealth through investment and purchases. In the light of this innovation through digitalization, here we would like to suggest a pathway to strengthen our ASEAN regional framework in the effort of promoting digital financial inclusion and literacy for MSMEs. First, by providing a clear and robust data set or database for all ASEAN member country MSMEs that is able to distinguish and also identify MSMEs capacity, level of inclusiveness, governance, and institutional quality. The second one, it is critical to provide digital facility for MSMEs beyond credit. Such a facility, which is also relevant and important for MSMEs, including e-payment system. The e-payment system is a product that has a major impact on the performance of MSMEs and is becoming more prominent since the pandemic COVID-19 hit all countries in the world. E-payment is a product that supports the basic function of MSMEs in the form of easier, direct transaction. And also, even with a very small transaction, it can also be facilitated without creating huge costs. So that is really democratization of the access and infrastructure for the MSME. The payment history of the MSMEs generate valuable data. This can create prolific information with so many purposes of utilization. The data can also provide a track of the MSME's performance for further development and also for access financing. An easy and practical payment system with a focus on the needs of the end user of the product is a successful factor for this product and increase interconnectedness. It can also facilitate cross-border payment, fast payment, digital remittances, and local currency settlement. The payment system also can increase trust and inclusivity, and it is aligned with the Bandar Sri Begawan Roadmap, or BSBR, back in 2021. The second one of the very important facility is market access. MSME needs support to develop their market and also to get the market access network, apart from the financing, which is also very critical. There are several forms of digital facility beyond credit that can be provided by formal financial institutions, especially bank, fintech, and also digital market platform. This including a network program with patron and client or partnership model with large company. In Indonesia, we call it Plasma and Inti. And also creating provision from financial institution facility, for example, banking website or application or platform as a means of marketing MSME's product, and also providing inclusion MSME in the supply chains through platform. The third aspect beyond digital financial inclusion is capacity building for the MSMEs. We are all understand that MSMEs facing many hurdles. One is their own capacity, whether this is on the product development, and also quality, and then penetrating to access to market and financing. So capacity building is very important. It could and it should be integrated and providing an efficient and effective way of the MSME to get the capacity building training. Capacity building program, which can be combined with financing program as a package, could be a very powerful to accelerate the empowerment of the small and medium enterprises. The scope of the capacity building in this case, including how they are going to be able to nurture and develop the innovation skill, or even in this case, reading data that they actually receive or get from their activity, as well as managing skill, for example, in the financing, and this will definitely create an opportunity for many small, especially micro enterprises to become formal. Ladies and gentlemen, we must not forget that there are certainly risks that we must also pay attention or manage with the increasing digitalization. Digital technology provides a lot of opportunity and benefit, but also within this technology creating a risk. As we all know, the big data collector is the winner. He who holds the data controls the games. This means that in addition to clear pathway for the MSMEs, it is very critical to have a prerequisite principle so that framework can manage the digital ecosystem that are beneficial, accessible, affordable, but at the same time also securing and providing the optimum benefit, especially on a data protection for MSMEs in the ASEAN. This framework, first, the interoperable involving the public and private sector, enable digital economy ecosystem in the ASEAN countries and enable MSMEs to go digital and also gain financial access, enabling MSME to get connected to the merchant in ASEAN, access a new market and new business modalities will definitely increase their outreach and also enable them to promote and to sell their product beyond their traditional border. In order for us to be able to develop this comprehensive framework, the prerequisite principle is included. First, providing the digital public infrastructure. This is especially important for the government to invest in the digital infrastructure. They also should promote and deploying digital public infrastructure and reducing gap. Second, data center that cater the important policy delivery. With a wide variety of data produced from the ecosystem, there should be a data center or special platform that is able to provide structure as well as to manage the data. The data can be utilized, structured, and constructed to inform the ASEAN policymakers in addressing cross-cutting issues and other related issues or policy. MSMEs can participate in this environmental, social, and governance principle or gender role participation amplification, also providing and getting credit scoring, and can also establish international partnership, as well as many other benefits. The last one is ensuring security protection for the MSMEs' participation in the digital ecosystem. This will include applying consumer protection principle, providing accountability standards related to due diligence training and monitoring MSMEs that join the supply chains through the platform. And also, the last one, ensuring security clauses for MSMEs at the level of agreement between the customers and the platform, and certainly data protection security standard is very critical. In closing, under the Working Committee on Financial Inclusion, or WC-FINC ASEAN, ASEAN aimed to reduce the financial exclusion from 44% to 30%. This definitely will increase the readiness of financial inclusion infrastructure that will require to be built from currently only covering 70% to 85% by 2025. The latest data on the ASEAN financial inclusion in 2022, the average level of the financial exclusion in ASEAN is currently at 22.62%. This definitely has already surpassed the 2025 target of 30%. But we should not satisfy with this achievement. We must not complacent. ASEAN still have more room to grow, and a lot of progress can be made to the benefit of MSME. The robust cooperation among the ASEAN member countries and creating a sound and robust framework, including collaboration, coordination, sharing policy experience and best practices, will definitely provide benefit not only for the all ASEAN finance ministers, policymakers, but also for the MSME. I wish you all a very productive meeting today, and we do hope that this meeting can contribute significantly the progress of the financial inclusion and the use of digital technology in a safe and also providing a productive opportunity for the MSME. Thank you so much, and have a very productive morning. Thank you.
Thank you so much to Her Excellency Ibu Sri Mulyani Indrawati, the Minister of Finance of the Republic of Indonesia, and now she will also continue to her next agenda, that is the press conference. Thank you so much once again, Ibu, for joining us this morning for the high-level dialogue on promoting digital financial inclusion and literacy for the MSMEs. The Minister of Finance of the Republic of Indonesia will now leave the hall as she will continue with her next agenda, that is the press conference. Well, distinguished delegates, ladies and gentlemen, let us now prepare ourselves to start the first panel session, as today the main part of the dialogue is the panel discussion. We will have two panel sessions today, and each session will be led by our moderator. The first panel session will discuss in regards to the digital innovative financial products and services for the MSMEs. So it's about the credit and also beyond credit. Without further ado, I would like to introduce our moderator in this first panel session. The moderator in the first panel session is Mr. Bomakara Heng. He is a Deputy Director General of Banking Supervision, the National Bank of Cambodia, who overseeing the performance of the banks and also financial institutions, developing and discussing regulatory frameworks, conducting macro surveillance, supervising credit bureau, and monitoring the financial inclusion in Cambodia. He was also a former co-chair of ASEAN Working Committee on Financial Inclusion. Ladies and gentlemen, please welcome the moderator on the first session who joined us virtually. This is Mr. Heng. Good morning, Mr. Heng.
Good morning.
Yes, now we are able to hear you, Mr. Heng. So we are here in Bali and we are very ready to start the first session. So without further ado, I will hand the floor to our moderator. Ladies and gentlemen, this is Mr. Heng.
Oh, thank you. As we all know that access to finance is a critical barrier for SME to start, sustain, and grow their businesses. About half of formal SME do not have access to formal credit and instead rely on internal fund or cash from friends and family to launch and initially run their business. If you're looking at emerging market, approximately there's around 130 million or around 40% of the formal SME have unmet financial need. Creating opportunity for these SMEs in emerging market is critical ways to advance economic development and reduce poverty. As mentioned, SME as a backbone of the economy should be used for the economic growth of each country as well as internationally. The application of different technologies, innovation, digital financial services, or the provision of financial products and services to digital channels has become an essential enabler to close the SME financial gaps. In this regard, today we have our three honored panelists, which is to share about the institution and the various digital innovation, financial product and service that they provided for SME. So, in this regard, I would like to introduce Mr. Sia Piadi, which is the Director of Investment Management System and Ministry of Finance of Indonesia. He is responsible to oversee guarantee microcredit program for Kecil, and before that, he served as Director General Advisory Staff, Lead Treasury's Regional Office in ASEAN, Indonesia, and also handle internal business process and organizational transformation sub-directorate. Our second panelist is Mr. Rick Ghosh, which is Regional Head of Lending at Grab that spans across 6 countries in Southeast Asia, responsible for management of lending, business operation, new business deal, and partnership development. Since joining the Grab, he has helped build a unique ecosystem lending business that spans across driver partners, merchants, and consumer segment. And before that, he has many experiences in management consulting as well as in banking industry across Asia, US, and Africa. Our third panelist is Mr. Thampi Kasti, who is the Managing Director and CEO of Open Network for Digital Commerce, or MDC in India. As we all know, that India is one of the fastest growing e-commerce market and one of the largest recent investment into e-commerce. So Mr. Kasti has been leading transformation for both public and private sectors, including during this consultancy serving in one of the big 4 firms. So without further ado, may I ask Mr. Siapriadi to share about the implementation in promoting digital innovative financial product services for SME. Please, Mr. Siapriadi.
Okay, thank you, moderators. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Very good morning for us. Thank you for the time for me. For the first topics, I would like to show you at least 2 +1 programs that the government of Indonesia, especially the Ministry of Finance, has been developing for empowering the MSMEs in Indonesia. So first slide, I think I have prepared the slide. Okay, while waiting for the slide, I would like to start that as has been mentioned by Her Excellency Minister of Finance before, that the MSMEs played a very, very significant role for the national economy, considering the contribution for the GDP and for the labor force, and also for the investment. So in Indonesia, I think, and it's almost the same with the other countries, that the MSMEs portion has been very large. It's about more than 99.9%, almost 100%. The economy has been supported by the MSMEs. But what has been done in Indonesia, we still now facing condition that first, that almost all the MSMEs are dominated by the trading sectors. It means that the productive sectors has been very, very small. And then by those MSMEs, it's very difficult for them to graduate. So almost of them just stay like what they have been there. So it's very difficult to make them to graduate. And also, we have to be gratitude that the digitalization has been started in Indonesia. At least up to now, the 88% of the MSMEs still not utilizing the online resource business. So it's a big challenge for us to enhance the business process of the MSMEs to use the digital platform. And other things that we are facing now is lack of financial access, and then the difficulties for them to access the global market. We have to open up the market for the MSMEs. So next slide, I would like to show you that the portion of the MSMEs in Indonesia compared to the total credit is just reach 20%, about 20%. That's very, very challenging for us to reach the target of the 2024 that the Mr. President have said before, that the portion of the MSMEs credit should be at least at about 30%. So it will be more 10% that have to be reached within around 1 year, next 1 year. It's very, very, very challenging for us. So compared to other countries, still, we are still very, very challenging for that. And what about the potential of the MSMEs? So for the next slide, I can show you that still there are a big potential of financing a portion for the MSMEs based on the BRI research, that still we are now have at least 18 million enterprises that can be financed based on the MSMEs financing. So this I think it's a big potential for us to enhance the MSMEs for the next periods. So based on those potential borrowers, the government of Indonesia has been developing at least 2 programs. The first one, the so-called KUR, or People Business Credit. For the next slide. So, sorry, how many minutes I have for this session? Sorry, Mr. Hang, 20?
10 minutes, 15 minutes.
10 menit. Okay, so
Members have 10 to 15 minutes.
10 more minutes. 10 to 15.
Yes.
Okay, thank you. So, the government of Indonesia has been developing people business credit that up to recently, and especially for the last year in 2022, the people business credit has been amounted at about 20.1 billion US. And it accounts for at about 20.34% of total MSMEs credit. So at least 1/4 or a quarter of the MSMEs credit in Indonesia has been derived from the people business credit, or KUR. So I think this program has been playing a big role to empower the MSMEs up to recently. So KUR is one of the biggest program made by the government to empower the MSMEs in Indonesia. It accounting at about 1/4 or a quarter of the total MSMEs credit in Indonesia. Okay, for the next slide, I would like to show you that we also have a program, the so-called UMI, Ultra Micro Financing. Different from the people business credit, or KUR, UMI financing is targeted to finance borrowers which is very small. That's why we call it ultra micro. For any remote area also. So I think this is very important for a very small enterprises to use this financing, because most of the MSMEs, especially the entrepreneur, is in this area. So up to now, the ultra micro financing has been reached at about more than 26 trillion rupiah. So I think it's a big increase up to now compared to the first launch of this program in 2017. Okay, at least we have 2 programs that up to now has been developing to empower the MSMEs subsector. So for this MSMEs program, we also created a digitalization to speed up the program. That's why we developed the application called SIKP. For the next slide, please. So SIKP, or Credit Programs Information System, is an electronic information system that used to manage and provide information and to make the process of the credit for the MSMEs more simple and more easier. That's why this SIKP has been used also for the other objectives, such as National Economic Recovery Program, or PEN. So through this application, we can enhance the program of the credit of people business credit to be more and more easier for the borrowers to use the program. Okay, next. So, to make it more and more easier, the SIKP, or the Credit Programs Information System, has been developing, and now we can provide an SIKP mobile. So it can be used through a handphone or other gadget, so borrowers or potential borrowers can access to which banks they can apply for their credit, and for those application, they can calculate how much money they can have a subsidy from the government. So I think with this mobile SIKP, it will be easier for the borrowers and the potential borrowers to understand and to know and to calculate. Is it possible for them to access and to reach the program? And then for the ultra micro financing also has been supported next by digitalization also for the ultra micro financing through the fintech, through the P2P lending, and the electronic transaction also can be used for this ultra micro financing through the digital improvement. So I think those two programs has been playing a big role for the empowerment of the MSMEs in Indonesia. And the last one, I would like to show you that also the government, next slide, has been developing the so-called DigiPay, a digital payment special for the government entities. So almost all the government entities will need office supplies, will need the stationaries that can be used for their daily activities. For that reasons, we try to make an e-commerce platform for government entities through this DigiPay platform that can match the government entities and the MSMEs and through the banks. So through this platform, they can meet and they can transact and they can deal with each other, and the payment also can be used by this government marketplace called DigiPay. So I think this has been a good start because still it is in a opening and the starting stage. So I think through years, I think, and we target that all the government entities should use this marketplace. So for the last slide, I would like to conclude with several key takeaways. That the first one, that the potential opportunity for financial institution to expand their services for SMEs is still have a big room. And then digitalization is very crucial. And the needs to implement more extensively in Indonesia is very, very big. So I think it's a big challenge for us also to empower the MSMEs through many, many programs in the next years. And then leveraging digital ecosystems and partnership with financial institutions also very, very significant for us to empower the SMEs and to open up the access with a range of financial services, resources such as loan payment systems and also the financial advices. And lastly, strengthening the whole ecosystem, including the infrastructure, skills, and also regulations, is very essential to enhance the quality of products and services produced by the MSSEs in Indonesia, and it will make them more and more competitive to enter the global market. I think that's all from me for now. Thank you, Mr. Moderator.
Thanks so much, Mr. Chiapriadi. Before I ask the question, may I proceed to Mr. Rick to share about the implementation on digital innovative for SME. Please, Mr. Rick.
Hi, good morning. Thank you, Mr. Heng. And thank you everyone in Bali who are joining us in person and those joining us virtually. And thank you, Ministry of Finance, for giving us, GRAB and me, the opportunity to share part of the GRAB story that we have had in Southeast Asia, specifically going into enabling financial inclusion for MSMEs and micro entrepreneurs who are our driver partners. So I will share a few slides. Let me try to pull that up. Just bear with me for a moment. Are you able to see the slides?
Yes, we can see it.
Okay, perfect. So it would be a brief introduction on GRAB and GRAB Financial Group in particular. Many of you who are from Indonesia or Southeast Asia would know GRAB from your daily lives. But for those of us who might not be from the region, I think a brief introduction might be helpful. So GRAB is Southeast Asia's leading super app. Super app means an application on your mobile that you use daily for various different things. But that's what it is today. But if we roll back 10 years, it was a humble beginning in one country, in one city. So GRAB started in 2012 in Malaysia, in Kuala Lumpur. And we started with a very specific customer pain point that we wanted to solve, which is enabling a taxi ride from point A to point B in Kuala Lumpur that is safe, that is predictable in terms of its pricing, in terms of its timing, and available 24/7. So 2012, it wasn't called Grab Taxi back then, it was called My Taxi, and that is where the journey of Grab started. Now, roll forward 10 plus years, we have been able to serve a much larger span of countries in Southeast Asia and cities. And as you would see in part of the slide below the timeline, we have been able to expand the offering from Grab Taxi to Grab Car to Express and going into financial services, starting with Grab Pay, Grab Finance, lending, which is the unit that I have been part of for last close to 5 years now. And then we've gone into Grab Invest and more recently GXS, which is the digital bank that's a joint venture between Grab and other entities. So this journey has followed our understanding of consumer pain points, merchant pain points, and micro entrepreneurs who work for Grab. And it's all brought together by one single app. And here I'm just showing the app that consumers use. There is a similar app that drivers use and a similar app that merchants use. So just for a moment, if you look at the consumer app, this is how it looks. There is a home page where all the daily services that Grab provides, starting with your ability to get to work or a meeting using Grab Transport, your ability to deliver breakfast, lunch, dinner, or whatever food that you may need, and groceries, which is deliveries, and Express, which is your ability to deliver any goods or documents from place A to place B. So these are our core services. And all of these core services and an expanding list of these services are empowered by a set of digital financial services. And as we were discussing today, I think the Minister of Finance brought it up that it's not just about credit. Actually, for us, it started with payments. So Grab Pay or OVO, as we would know it in Indonesia, has been our first foray into financial services, which allowed us to transact smoothly, connect the service provider like merchants and drivers with the consumers without the risk of cash, without the risk of fraud and other inefficient issues. And we went into cashless, and then we expanded into a suite of other financial services: insurance, lending, remittance, invest. And today, just to capture the scale and breadth of the ecosystem, we have 30 million plus monthly transacting users across Southeast Asia, 4 million plus merchants, and 5 million plus driver partners who are micro entrepreneurs in their own rights. So on the 30 million are users, and roughly 10 million are providing services or solutions on Grab. And this ecosystem has created a massive impact, particularly in the light of last number of years where we have suffered due to COVID. More than 1 million merchants joined Grab to expand the boundaries of their business, taking their business from offline to online, or expanding the catchment area or services they can provide. So for example, a small warung in parts of Indonesia who were just selling physically through their store could probably serve a 1 kilometer radius of those who knew her, right? But if she was cooking food that was so great, Grab allowed her to expand the boundaries of her business, bringing her online. And that's been a primary purpose of the platform, to provide market access to all of our participants. And the way we have gone about that, and this is my sort of third and the last slide on going into financial services, is a suite of products that serves all participants of the ecosystem. So we started with cashless payments back in 2017. It's called Grab Pay in many markets, and OVO in Indonesia. And the cashless payments is a win-win-win for all three stakeholders. So for consumers using the service, it makes this use of service smoother, takes out the hassle of carrying cash and the risk that may come with consumers carrying cash late at night. For the service providers, who are drivers and merchants, it provides them the safety of electronic payments. It builds their records in the financial system of sales, transactions, money flow. And for Grab, the platform, it makes the entire process smoother and less prone to risks such as fraud. And we have known, now that we have provided this service for more than 5-6 years, we know that this enhances customer loyalty. So this is a strong benefit for the platform as well. The other services are Pay Later, which is a form of embedded credit that we provide in certain markets. And that again creates customer convenience. We have it in Singapore, Malaysia. We are looking to expand this solution in a few other markets. Thailand is already in pilot phase. The third pillar, which is the part that I spend most of my energy in, is the driver and merchant lending. And this is going back to 2017, 2018, when we got to a stage where the ecosystem was large. We understood that while the consumer part of the ecosystem, the users, could have a very varied demographic profile and could often be mass affluent or affluent, the supply side of it, which is drivers and micro merchants, the warungs, they are generally underbanked or unbanked, particularly when it comes to their needs of credit, needs of insurance. And given there are informal businesses, that their income isn't captured by any formal source of records, and their P&L, their balance sheet, such formal constructs may not exist, and the owner of the business or the driver may not even know what his or her P&L may look like, it became important that we, as the platform, the primary platform on which they earn their living, are able to support them through cash flow solutions. So that's how we went into lending, and then we realized that again, while it helps the drivers and merchants through emergency cash situations, through say car maintenance or breakdown of car and the driver needs cash, or for merchants it could be expansion or renovation of their existing business, or maybe even online digital marketing. It has strong benefits for the platform as well. So for for drivers, we know that those who use credit solutions have higher degree of engagement with us. Similarly, for merchants who use credit solutions also do a lot more business with us, and they're generally the top grade of merchants who are growing and expanding using credit in the sensible way. Then finally, where we went after credit or around the same time is insurance. And that came from, again, the same realization that the current insurance constructs, so for example, car insurance, are often very chunky in sense it covers you for a whole year, and it asks the user or the buyer of the insurance to pay a lump sum amount of money at the start of the year. Now, for our drivers whose incomes are micro cash flows every day, every hour, it is very hard for them to pay $1,000 in January to cover them for 12 months of insurance, or even if it is not $1,500, let's say, in other countries, it's a huge amount. So in insurance, what we have done is we have fractionalized that amount and made it very specifically linked to their activity and income. So for example, we have this product in Malaysia where a driver can cover herself for less than $1 a day. So we've taken the same insurance, but we have made it specific to small timelines, and we have made it specific to when the driver works. So whenever the driver is working, that day she is paying less than $1 to cover herself. On the days that she's not working, she doesn't need to. So we have done that for insurance, and we have also gone beyond now to create health insurance, life insurance and such benefits for particularly the driver and going forward the merchant side of the platform. And all of this is powered by data that we as a platform capture based on all the transactions that happen on the platform and our access to future income of drivers and merchants. While this is the basic infrastructure of the financial services we provide, we do use external sources of data wherever that adds to our decisioning, wherever it can improve the quality of our offer. And we also work with a whole array of existing financial services providers, whether those are banks or insurance companies or other non-bank players, to again make sure that we are providing the best available solution to our participants, whether the solution comes from us in terms of we manufactured it or we distribute it, but we still make sure that it meets the need of all of the players on our platform. So with that, I would probably just pause and say, this has been a great journey for Grab for last 10 plus years. And this journey is still a long way ahead because our platform is expanding and many of the solutions that we offer have a long way to go before it reaches the penetration and coverage that we expect it to get to. So I'll stop sharing, but that was a brief introduction from my end on what Grab has been up to.
Thank Mr. Rivik for sharing us about the journeys of Grab in starting from Grab taxis to Grab investment, also moving to a Grab digital bank, and also to share us about the offering for the solution that had been done by Grab with a strong ecosystem benefit such as cashless payment, pay letters, merchandise lending, and insurance sectors. So may I move to Mr. Tempenski? Mr. Tempenski, please share your implementation. Yes, please, within the time limit, please make it short in 10 minutes. Thank you.
Thank you, Mr. Heng. My name is Koshi. I lead the Open Network for Digital Commerce in India now. So let me just take a minute to set the context of the journey that we were taking in India with respect to innovations that is empowering especially the small and micro enterprises, including the artisans or even taxi drivers or anybody. And this is a journey that started about 10 years ago when we when we started working on the idea of a public digital infrastructure as a foundation for industry as a whole to benefit based on the public digital infrastructure or the digital rail established by the government in association with the private sector. So it was like a PPP, private public participation, to build this digital rails. If I just touch, the first one was to address the issue of identity, because we have about 20-30% of the population had difficulty in establishing their identity, and which meant that when they have business interactions with third parties, it was very difficult, especially for them to establish their identity in an authentic fashion. That's when we went into a biometric ID, what we call the Aadhaar, which created a foundational ID for 1.4 billion people. And on the top of which, when we enable eKYC, which is a way for banks and financial institutions and telcos to establish KYC of any intended participant, suddenly it enabled broader participation of both at the merchant side and at the consumer side. The next in line in the same way that we provided was what we call a unified payment interface, which was again a unbundled way of enabling financial transaction, even the lowest value, without being very costly, because we realized that the digital transactions were costing almost $0.75 per transaction, which meant that many of the small payments merchants could not take the benefit of it. So the unified payment interface completely transformed that, which in this advantage is that if I have a phone number and if I match that phone number along to my bank account, anybody who wants to transfer my money need not even know my bank account details. They can do it through that phone number. Or if I am a small merchant, I can publish my banking details using a QR code stuck on my wall. So don't even need a digital device. So which has been a complete transformation of the payment system and has now established itself as one of the globally most advanced payment system, with about 40% of the global digital transaction happening through this system in India alone. 40% of the global transaction is happening in India, using the system. Something like almost 7 to 8 billion transactions a month is what it is. And such kind of facility gave a lot more comfort for participation of small and micro enterprises into the financial system. And today the banking penetration, which used to be hanging around 20% about 6 years ago, is now more than 85%. The next in line in this idea of public digital infrastructure is what currently I'm heading, is what we call Open Network for Digital Commerce. This is an attempt to completely democratize digital commerce. What does it mean? Let me just show one slide quickly. Sorry, 1 second. I'm just taking 1 second to slide. For some strange reason, I'm unable to share, so it's okay. So what I'll continue without the slide. So when I say democratization of digital commerce, it has a very significant capability of transforming the way e-commerce happens today. As you're all aware, e-commerce, whether in India or anywhere in the world, whether in US or whether in Europe or whether in India, you would see significant concentration in this area of digital commerce by few platforms. So in India, about globally, if you look at about 45%, 42% of the e-commerce is by 4 companies, primarily China. And the same is, if you look at any of the countries, also the same issue is there. What it means is that the intermediary, the platform in the middle, has significant control on the endpoints, and very often the small and micro enterprises do not get the same opportunity to be visible to this large digital the large cross-section of buyers. So the strategy of any of these platforms is that if you are a seller in a platform A, you are visible only to the buyers in the platform A. And if you are a seller in platform B, you are visible to a buyer only in platform B. So this becomes a challenge for any enterprises, because if they want to be present in, expose themselves to, the consumers on multiple platforms, they have to integrate with each of this platform, which becomes a costly affair. So that's why eventually the network effect, what we call in economics, will ensure that the concentrations do happen. So what we have done in India is to bring a paradigm shift. So we have developed a protocol. If I just loosely use the word, I say HTTP of commerce, we call it ONDC protocol, which makes it possible for the building blocks of commerce to be unbundled and interoperable. Which means that if I am a seller in any platform, I can be visible to the buyers in any of the buying platform. So you are unbundling the building blocks. The seller interface and buyer interface are unbundled. It puts a lot of comfort to the sellers that they don't need to worry about integrating themselves with multiple platforms. Secondly, they can, for example, some large enterprises may feel comfortable on the very sophisticated platforms, and some micro enterprises may be comfortable with a very specialized platform looking at their segment of industry. But independent of that, they will be visible to the whole lot of buyers available. For example, in India, if you look at the buying applications together being a cohort of 1 billion buyers, independent of the platform they are. So as of today, there could be multiple buying platforms. It could be fintech, it could be bankers, it could be telecoms. For example, today, let's say a fintech or a bank want to be in e-commerce, it's practically not possible for them, because they will have to go and list all the sellers, and that is not their expertise and capability. Whereas in the open network model is that I, as a bank, can enable my clients to discover any products that are relevant for me from this large set of products available in this open network. So that's a whole idea of democratization of commerce. And with this idea, we started a few months ago, and we are seeing fantastic traction. So we are seeing participation from large enterprises like Unilever on one side and Google on the other side, to small and startups coming together to enable merchants of diverse hue and cry to be present in the digital commerce. Especially when it comes to MSME, this becomes all the more important, because today, because the focus of the platforms even today is that the creamy layer of the society. For example, in India, we thought while the digital commerce has been growing exponentially, but still the penetration is about 5 to 6% on the buying side, and the selling side about 1 to 2%. which means that they are primarily focused towards the elite of the society, and the products are what is relevant for them. But in an open network, you will see diverse kind of enterprises coming. In fact, we are one of the buying application who's focusing only on the demand in the villages, going one step further by making themselves, providing what we call assisted commerce through kiosk for the villagers who may not even have, access to smartphones. So then they are going to create a demand for the products that is relevant to them. So it means that on the other side, supply side, it makes sense for those products to be made available in this open network by specialized platform. So what we are expecting in few years' time, the transformation, is that every enterprise which has a product or service catalog that it would like to publish will be able to publish using this ONDC protocol. And diverse kind of buying application will help their kind of buyers to source what is relevant for them. So the buying application truly become the agent of the buyer, and the selling application become the agent of the seller. Unlike in a pure platform kind of model, where there is often a conflict of interest, where they would like to promote certain products for which they have some special deals, as a seller application. So those kind of incentives for different practices, not so healthy practices, get removed. In fact, this is a global challenge. That is why if you look at the Europeans are trying to address this issue called Digital Market Access Act. The Americans are trying to address this issue called America Innovation and Choice Online Act, which are digital mechanism, which are, regulatory mechanism to address this concentration and associated practices. Whereas we in India are trying to attempt using what you call the technology and markets with enabling policy. And that is what is expected to bring a significant transformation. Just adding two more points, when we have such large level participation by the small and micro enterprises, including artisans, ultra micro enterprises in digital transaction, it means that we are creating digitally verifiable, digitally signed transaction histories being available, which can form the foundation for working capital loans to be sourced from various financial institutions who are able to give them the best one. So suddenly, because normally most of the banks and financial institutions give their credit on the basis of the assets they have. Now suddenly we have a possibility of digitally verifiable, digitally signed transactions, which can form the foundation of working capital loan. Similarly, we can have sachetized insurance for each of these merchants, for each transactions, which gives the confidence to the buyers on one side that even if for some unfortunate reason the some product get lost or in transit, they will still be able to be compensated, because some of the small enterprises may not have the wherewithal to take this hit. So that kind of confidence also help the micro enterprises to sort of enhance their market reach nationally and internationally. We are also enabling the rating agencies like Dun & Bradstreet, Experian, etc., to provide badges to the small and micro enterprises, which also go a great extent towards building trust within the country as well as internationally. So what we are talking about here is a very unique experiment that has never been attempted anywhere in the world, by what we call creating a complete open network for digital commerce built on open protocol, which is available there in the GitHub for anybody to touch. It is lying in CC&D. It means that anybody has the freedom to take it and use it, so long as the credit is given. That's a kind of approach we have taken, and I've given you a very brief exposure of the journey that we have been taking in terms of transforming in terms of digital innovation, especially establishment of digital public goods as a foundation, base rail on which the industry can build itself. Thank you.
Thank Mr. Koski for sharing us about the implementation of what has been done at ONDC, especially the platform that we unbundle the building block that help support SME better access to finance. So may I go back to Mr. Siafriadis? Mr. Siafriadis, you have raised about the policy and initiative that Indonesia has been done to enable SME better access to finance. In this regard, I would like to seek your opinions. What other countries in ASEAN can learn from the initiative that have been implemented in Indonesia, as well as from what you experience and your knowledge, what you advise to do differently and can be better?
Okay, thank you, Mr. Hang. Just like I have been told before that in this session, I will show you the programs developed by the government of Indonesia, at least 2+1 programs. 2+1, it means that first one is the People Business Credit program, and the second one is the Ultra Micro Financing program. And the third one is the DG payment or DG Pay platform. So I think one of the main important thing is that we need to make a combination policy, a combined policy. So like I've been said before, that People Business Credit is a program that is developed to those MSMEs which are can be access the banking sector, and this program is a subsidized program which also include a guarantee program inside the subsidy. So it's for the People Business Credit program. As for the Ultra Micro Financing, it's a program that is targeted to those with has limited access to banking sector. It means that a non-bank institution can be the main institution to deliver the financing program. So we separate for those which has an ability to access the banking sector. We create the People Business Credit programs. And to those with a very limited access to the banking sector, we created the Ultra Micro Financing program. It's very, very low and very limited amount of credit for these ultra micro entrepreneurs. So I think this kind of a combination will be very, very important, because I think there in a country there will be a leveling of MSMEs. So I think we need to make a combination program. And for those that will have access to the government entities, we created a platform for these MSMEs that can provide the office or the stationery useful for the office, activities. We create the platform to support the government units, government office, and also we can support the MSFEs that has a relation to the government institution. And also we put banking sector there to enhance the payment system for the MSMEs. So I think one of the most important thing is how to create a combination program for empowering the MSMEs, for those with a close relationship with the bank, We create the people business credit. For those with have no or limited access for a banking sector, we create ultra micro financing programs. And to those we have a relationship with the government sectors, we create a platform to support the MSMEs. I think it's one of the important things that we have been creating in Indonesia. But also now we have a target, Mr. Hang, to implement blueprint, the so-called Indonesia Islamic Finance Market Development Blueprint. So to enhance the Sharia transaction in Indonesia, we also now has developed a blueprint. Now I think it's the time for us to implement the program. But unfortunately, for this time, I cannot explain you more about that program. I think that's all for the moment, Mr. Heng. Thank you.
Thanks so much, Mr. Shishai. May I go back to Mr. Vivek Ghosh? Great. From what have been done, it seems a lot and promoting platform that could enhance cash flow for lending for SME. In addition to what we have been done today, does GAP have any new initiative to promote lending for SME?
Yeah, Mr. Heng, great question. I think first it's important to recognize that there is a long way to go for us to even enable the kind of credit access that we have started providing to SMEs. So we started our journey in Thailand providing merchant cash advance, microcredit to those who are active on Grab platform in 2019. That product, because we offer, we have a regional way of developing tech products and then, customize it, tailor it for individual countries. And what we realize, MSME ecosystems are very unique. They're very heterogeneous and specific to countries. So even if we do offer the same product across different countries, it takes a while for us to get the segment right, their needs right in terms of the limit that we provide, the tenure of the product, and so on, and even the use cases. So currently our use cases are merchant cash advance, which is a micro cash loan. Then we have a use case which is sort of a pay later facility for merchants. And the journey that we are on, we want to make sure that we are working with the current sources of traditional or formal credit, and we are able or enabling these merchants to tap into those longer forms or more traditional forms of credit. So there is a gap in the market where, because these merchants are micro merchants and informal, and their business scale and appetite for credit and credit ethics is not understood by the traditional sources of credit. That's the gap we are trying to bridge. But then we want to carry forward and work with the banks, as we are working in many markets, to make sure that there are, if for example a merchant wants to take a loan, which is a 3-year loan or a 4-year loan, to expand their business, open a new shop, those are forms of credit we want to enable as well. Whether we do it on our own or in partnership, I think the platform is very open. Again, we want to be driven by the merchant and the needs of the merchant, and then making sure that we are able to address those needs as efficiently as we can, right? So the two dimensions of answering your question: one is taking the same product across different markets. We are in an early stage of that. And second is expanding the suite of solutions that covers broader range of credit needs than the short-term microcredit need that we are currently meeting. So both journeys are on, and it will take us some time before we get there.
Thank Mr. Vivek Ghosh for clarification. So I think during the time, may I ask a question to Mr. Koski regard to what have been done by ONDC I think it's important for people to understand how to use the product that have been offered by ONCB. In this regard, what is your plan to or have been done by ONGC in promoting users' awareness about the product that have been offered?
We are checking how we proceed in evangelizing this idea broadly. So the way that we look at is that the complete information is, of course, available in public domain. So well-established enterprises can check it out and do it by themselves. Whereas we realize while the ONDC gives a equal opportunity for everybody, it doesn't have the many of them may not have the equal capability. So that is where we work with the banks, financial institutions, especially developmental institutions and philanthropic capital. Literacy program with respect to how they need to prepare themselves for this digital world where many of them are not there today, and what are the kind of technological support they need by providing them standard solutions and where they have no practically very limited expenses in adopting that, and also providing them the educational material in their own regional languages. So we have a very active initiative in terms of evangelizing this idea to a broader cross-section so that the adoption of the small enterprises really come, because we have enterprises like small Development Bank of India, Small Industries Development Bank of India, which we call SIDBI, NABARD, which is focusing a lot on agriculture sector. Then we have micro and MSME ministries and so on and so forth. And of course, even philanthropic capital are coming towards helping in this direction. Plus, like I said in the beginning, the complete protocol and the documentation related to that is available at public domain for anybody in the world to sort of look at it and evaluate and take a call.
Thank you, Mr. Kurski. So now may I hand it to the audience, either join in person or virtual, if they have any question. Maybe 1 to 2 questions from the audience.
All right, Mr. Hung, let me help you. If there is the participants here who attend this dialogue in person, who join us in person here in Bali, if they have any questions to the panelists. Ladies and gentlemen, any questions to our panelists, please just raise your hand. We have no questions yet for the offline participant. Mr. Hung?
So I think we have no question also on online participation. And during the time limit, maybe I can wrap up for the panel discussion. So in this regard, we can see that based on the panel discussion, we see that SME is playing an important role in supporting economic growth. However, we can see that there's still a challenge in access to finance, and that can be supported by the bank and financial institution to expand the credit for SME. And further, using the digital platform will also enhance those SME to better access. But in addition to that, it is also important to promote infrastructures as well as enhance the skill of the SME, and also working with the regulator to ensure the qualities of the product offered to SME is qualities. We also can see that the cash flow is very important to ensure the abilities to pay of the SME. In this regard, developing an apps like Grab is also another tool that can enhance those SME with difficult access to finance. In addition, for the combination of programs is also essential for SME in terms of the SME who have been access to bank and SME who has not been access to bank, as mentioned, the people and business credit line and the trust funding program that developed by Indonesia. For the platform, we also see that it is important to ensure that the platform work well between the traditional product and across the market, as well as the solution for the credit needed in the market. We also can see that while we promoted digital product for SME, it is also important to also enhance their literacies in using digital financial services. In this regard, the cooperation and coordination between the technologies service provider with bank and financial institution and these stakeholders are very essential to ensure that those SME can understand better about the available services offered by the bank and financial services, as well as available platforms that are available in the market. So this is the wrap up of the conversation of the panelists. I think maybe now we can further to the next agenda, if you can take a group family photo. I also would like to express my sincere thanks to the co-chair of the Bank Josephine and all the ASEAN colleagues who either participate virtually and also in physically in Indonesia. And I'm looking forward to see you soon next time. Thank you.
Thank you so much, Mr. Hung. And please, yes, please have a group photo with the panelists. And all panelists, please just looking at your camera for a while. Dan mungkin bisa ditampilkan foto atau wajah Bapak di sini untuk sesi foto bersama sejenak. Alright, on 3, 2, 1. Thank you so much. Ladies and gentlemen, please also join me in giving a round of applause to our moderator, Mr. Hung, and also all of the panelists in the first panel session. Thank you so much, Bapak.
Thank you.
Thank you so much once again to Mr. Hung for moderating a very interesting first panel session. So now, ladies and gentlemen, let's just continue to the second panel discussion. And the title for our second panel discussion is Strengthening Financial Consumer Protections for the MSMEs. This session will be also led by our moderator, and this moderator is a senior digital financial services advisor with more than 25 years of field experience in Asia and in the Pacific, and also of course in many other countries that make him listed among the top 100 fintech influencers to follow. A leading figure in the digital financial services industry that has been moderated or chaired more than 100 international conferences. So I think it's his 101 international level conference, yes. So ladies and gentlemen, please give a round of applause for the moderator on this second panel session, Mr. John Owens. Mr. Owens, how are you doing there?
Good, thank you very much.
All right, so ladies and gentlemen, I will now hand the floor to the moderator. Mr. Owens, please.
Thank you. Good morning to our host and participants in Bali and Southeast Asia who joined us, and good evening to some of the panelists in this session. I would like to thank the Ministry of Finance and our representatives from OJK, ASEAN, and the other participants from the region who have come together to allow us to have this important session today. Ladies and gentlemen, it's my honor to moderate this panel session on strengthening financial consumer protection for MSMEs. We've heard on the first panel about the new innovative digital financial services for MSMEs, and of course the flip side, or balancing act for policymakers, regulators, and the providers themselves, is a need to strengthen financial consumer protection issues, not only for consumers, but for MSMEs as well. I'd like to introduce the panelists for this session. I'll mention all of them, and then we'll go through the order, and each one will make a presentation about their work in their specific areas and focus for consumer protection. Our first panelist is Mr. Sarjito, who is the Deputy Commissioner of Financial Services and Business Conduct and Consumer Protection Supervision at the Indonesia Financial Services Authority, OJK. He has devoted a vast majority of his career in capital markets, but he has now been working, focusing on financial education and consumer protection. As a progressive thinker and productive speaker in the area of capital market enforcement and consumer protection, he has spoken at several international events. So we're honored that he could join us here today. We also have the other panelist is Mr. Eric Duflo, a good colleague and friend from CGAP. Eric is an experienced policy and program expert in the area of financial services. He has also worked for 25 years in making financial services more inclusive, more responsible, with expertise in fintech, digital finance, regulation, supervision, and of course, one of the discussions here, customer centricity, which is key to consumer protection. He's now CGAP's work on, he focuses as the lead of CGAP's work on consumer protection from the policy, industry, and consumer or customer perspectives, and ensuring that financial services have positive outcomes for customers. Our last panelist is Scott Stewart. Scott is the Chief Executive Officer of the Innovative Lending Platform Association based in Washington. They're the leading trade organization focusing on a diverse group of online lenders and service companies that serve small businesses and dedicated to enhancing best practices and standards that support responsible innovation and access to capital for small businesses, including what we'll talk about here, the Smart Box. Without further ado, let me just turn this over to our first panelist, Mr. Sarjito, who will explain a little bit more about what he does. And I'll ask all the panelists that, given that we've run a little bit late, if you could keep your presentations to 10 minutes so we have time for questions and answers. Thank you, Mr. Sarjito.
Thank you, John. My fellow panelists and ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Om Swastiastu, and very good morning to all of you. Now I'm thinking to speak a little bit faster than the time that you were given to me, John, like 10 minutes, hopefully, because I think some of the material has been presented before by my colleague from the Ministry of Finance. First of all, I would like to give you all the legal basis for the consumer protection in financial sector. Would you please show up the slide? Next slide, please. Okay. OJK established Indonesia FSA established with the objective, three objectives, but I would like to underline for the third objective of the OJK establishment, which is capable of protecting the consumers and public interest. This is very important. It was not available in our previous institution, both in Bank Indonesia and Minister of Finance, Capital Market Supervision, and non-bank financial institution before we merged. So we really focus on the consumer protection after as the establishment of the JK or the Indonesia FSA. Next slide, please. Well, next slide, please. Okay, I would like to give you the issues in Indonesia. I think is majority in the big countries like Indonesia is that there is always a gap between literacy and inclusion. As you could see from the slide that on our survey 2013, the gap is still quite high between literacy and inclusion. And on the next survey, which is every 3 years, we have a survey. 2016, the gap is still high. And also in 2019, the gap is still high, even we have done aggressive education and any activities to push up the literacy of the society, but still the gap is still quite high. But thank God, on 2022, the gap is narrower. You could see from that the literacy is at the 49.7%, and inclusion is already 85.1%. And we are also being pushed by the president that by the end of 2024, the inclusion must be at least 90%. So again, the gap is the issue, and we have done a lot to narrow the gap, to make that society, when they get into the business in financial industry, they not only they get into the business, but they know their right and the obligation. Okay, the gap is also not only among genders, but also province, and also among financial sectors and age group. Look at also the problem of being the gap of between literacy and inclusion. So it is low digital literacy. So people tend to over-indebted classes, and then they're gonna have financial fraud, mainly on social engineering, phishing, scheming, and others. And the thing, because most of the agent or financial service provider, they tend to sell the product without giving clear information to the prospective consumers. So they may do what we call reselling. So people not really understand the product, the financial product, and because tempting the way how the agent probably selling the product in a way that with the what you call so tempting, then the prospective consumers interested in that product but not really read the right and the obligation. So, and also we caught also the advertisement which is misleading. So by effective investigation and also enforcement and surveillance of this advertisement, then we reduce for the financial service provider who misled advertisement in the market. And this is very significant. And I think it's everywhere in the world. The issue of the misuse of personal data is also everywhere. And the thing is that when the debtor failed to pay, failed to comply the commitment in a contract, then eventually the financial service provider used the third party, which is what namely called the debt collection. Normally the complaint in OJK is the unethical debt collector, which is normally harsh and also not follow the rules and law. And in this case, so we not only persuade, but we inform the society and the consumers, report to the police officers if they are experience such a bad behavior of the debt collector. And the thing also, unethical, unfair digital contract, which is we also found that complaint in our complaint unit. Next slide, please. For this slide, I don't think I will deepen more because I think it has been spoken and presented by our previous presenter from Ministry of Finance and others. And to move to the next slide, please. Okay, this is the thing. Why then the access of the financing for MSMEs is really become attention of the government and also the parliament. Under chapter 19, article 249, let me read slowly. In order to increase the resilience of the national economy, through the empowerment of micro, small, and medium enterprises, it is necessary to facilitate access to financing micro, small, and medium enterprises. Ease of access to financing for micro, small, and medium enterprises, as referred to in paragraph 1, is mandatory, conducted by all banks and or non-bank financial institutions by applying the prudential principle and risk management. So in lots of opportunities, even the President of the Republic of Indonesia, Mr. Jokowi, also stated several times that bank need to help the MSMEs grow effectively and grow in a way that are very healthy growth. Next slide, please. Well, even when the issue is consumer protection, we want to do a preventive action rather than on curative action, basically. But this is some of the activities that has been done by OJK of 2022, which is we have done 148 education programs, and you could see there and read carefully on the slide. So what we have done on the community education program, massive education program, training of the trainers, education program on financial planning, Jamboree, and many others. And we also focus on the religious, student, because in Indonesia we still have education program, one of under Ministry of Education and one of under Ministry of Religious Affairs, and we also focus on them. And we also always join the World Investor Week to reach to rural areas. We also use a radio talk show. We do also workshop on the consumer protection, and we create aggressively and be involving the industry on what we call the learning management system. We create from the basic level, intermediate level, and then next would be in the advanced level. So we hopefully that every society in Indonesia may ask everything about the financial things. They can hook up in the internet to OJK website, and they may ask everything, and we will provide and answer everything over there. This is the way how we can reach in the society, which is in the digital era. People tend to use a computer and some mobile phone rather than visiting or attending any presentation or anywhere. So you could see on the target, on the right side of your slide, is the students and youth. Why then student and youth? Because they are also a group of people, group of society that literate enough on the digital literacy, and public and also MSMEs and others. Next slide, please. Well, we do lots of activities to try hard to create well-literate community in Indonesia. So you could see over there the priority segments and financial literacy topic, which is 10 financial literacy and inclusion targeting. You could see there on the slide. I don't think I need to read anymore. And also we have financial education topic for MSMEs and women. This is also become the target of the NSLKI 2017 with the selected topic like gold saving, education, insurance, mutual fund, financing, people, business loan, and peer-to-peer lending, which is become the big issue in Indonesia, mainly the illegal peer-to-peer lending and equity crowdfunding. Our capital market also provide equity crowdfunding for the society, MSMEs to raise fund and also society to invest. Next slide, please. We have also the program, which is, this is widely accepted by not only the governors, but also mayor and region all over Indonesia, what we call the Regional Financial Access Acceleration Team, or TPAKD. This is established on data based on March 2023. We have only all over Indonesia 488, and then we have 34 provinces and district 454. And one of the things which is important over here, besides we push on those region and province to push the literacy of the society, mainly the student from primary school to high school and also the university student. We also have a program that put by most governors and mayors and regions all over Indonesia, what we call the Credit Fight for Loan Shark, because most of the MSMEs, basically, they are trapped with the loan shark in almost in Indonesia, which is, as the topic before, I think this kind of topic, we push up the financial inclusion and we push down the financial exclusion. So hopefully by promoting aggressively on the type of financial industry and also financial institution and many things, we hope that our society understand to whom they need to borrow. And then with respect to the peer-to-peer lending, we have closed illegal peer-to-peer lending, thousands of them. But since they are online, we closed today, 5 minutes later, they, show up with another name. So this is one of the big issues in Indonesia. We have to fight illegal investment scheme and also illegal credit, which is not licensed at the OJK. And we push our society, if they want to borrow with the peer-to-peer lending, they need to borrow to peer-to-peer lending, which is licensed by OJK. So we hope really that our society understand that, because the complaint to us that they are being trapped and also harassed and also being collected. Collectors, which is not in good way. But the problem, they don't borrow or join peer-to-peer lending, which is legal or licensed by the OJK. So OJK certainly not easy to enforce those who are not under the OJK. Okay, so next slide, please. So one of the things, the most important thing with the MSMEs and consumer protection in financial sector, which is we have to always not only socialize and also distribution to all the society on the consumer protection principles. We work with the industry and we also coach industry. We speak in lots of opportunities that the principle of the industry, principle of consumer protection is that they have to have adequate education and disclosure and transparency and fair treatment and responsible business conduct, protection of asset and privacy of consumer data, complaint handling and dispute resolution, and compliance and enforcement. So the issue in Indonesia is that the way how the agent, the way how the financial service provider, we coach the complaint from the consumers that they have got the asymmetric information, not true information. After the agent sell the product, they hide something, not fair enough to tell what kind of product, what is the right and the obligation of the consumers, and what is the right and the obligation of the financial service provider. This is the complaint that's still available in Indonesia. So now with the market conduct supervision, and now thank God that this market conduct becoming is already been written in the law, the current law, which is now there is chief executive within OJK who supervise the market conduct supervision, because the issue of consumer protection basically is on market conduct. So we watch, we always monitor and do surveillance, and also keep our eyes on how the financial service provider design the product, how to sell the product, how they treat the consumers after selling the product, and all those kind of things. Next slide, please. Next slide, I think, is only the complaint that we have from the consumers, the society to the OJK, but you could see even the Kur Sharia, basically they even look like lots of complaint. Basically, most of the complaint is asking a product, and still who are still high is that online loans, which is we could see productive online loans even still high. But this thing actually we try to resolve. We call also the financial service provider who are largely being complained, and we ask them why is that happen, and also educate them how to treat the consumers, and also we always teach, educate the consumers and the society financial product. I think that would be enough for me. Other speaker could elaborate more on this topic. Thank you, John. Back to you.
Thank you very much, Mr. Sujito. It's been, I know I've had a long working relationship with Indonesia. I've really watched your challenges, particularly with online lending. So we'll get back to that, because I think there are a lot of lessons that you can teach others in ASEAN, because I think you have one of the largest online lending markets in ASEAN. I'd like to turn over at this point to my colleague, Eric, who is joining us from Washington, D.C. I know it's late, so I really appreciate you joining us, Eric. Thank you. Eric, over to you.
Thank you very much, John. Thank you very much to our Indonesian hosts also. Let me try to share my presentation. Can you now see it? Yes, very good. Okay. So I think, there's been a lot of discussion so far, obviously, on MSMEs, but the work I'm going to present on consumer protection is broader, I would say, than just micro, small and medium enterprises. And one thing that we have found at CGAP is that micro and small enterprises, in particular, overwhelmingly use retail finance. So the line between personal and enterprise use of financial services can be blurry. So I would say that all what I'm going to present is very relevant for micro and small entrepreneurs, but probably less for medium enterprises, which very often have more specific products than micro and small enterprises. So I'll first say why we believe at SIGAP that financial consumer protection is becoming more important, and I'm going to focus on digital finance. And what we are seeing is that if you look at the global Findex, we see a major increase in the number of people who have access to formal financial services, and we see that a lot of the progress globally has been made through digital finance. And we just saw a presentation highlighting also the progress made in Indonesia, which is also partly thanks to digital finance. So we've seen also a lot of improvements. We just saw, all the measures that OJK is putting in place or has put in place, for example, in terms of regulation and supervision framework. And, the thing is that the issue that we're facing, though, is that we have research that is showing that in spite of all the progress, the nature of risks is evolving very fast for MSMEs and customers, generally speaking. This is because we have many new providers of financial services. Some of these new digital financial services are more complex, and there is often a lack of effective regulation and supervision for some of these new providers. And we were hearing about informal players, and this is valid actually for digital credit providers in some cases also. So what we have done at SIGAP is that we have analyzed the evolution of the nature of consumer risk globally, and we've come up with this typology. And as you will see, it's also very much related with what we were being, told about some of the principles, for example, for OJK. So the four main categories that we have found for digital finance in terms of risks are frauds, for example, SIM-flop frauds, data misuse, for example, algorithmic bias, or social shaming with digital credit, as we've seen in China and India, lack of transparency with undisclosed fees or complex interface, inadequate redress mechanism. For example, they become very complex. You don't know where to complain on the digital financial services. And then we have cross-cutting risks like agent-related risks. So these are the mom and pop shops, that act on behalf of digital finance providers, and then network downtime, which is also a cross-cutting issue. Now, if we look at the trends in terms of scale, the red arrows are actually based on the global research. We really tried to find hard data that was giving us some indications of the evolution. And the red arrows are not good news. They're showing increase in terms of scale, the scale of the risks. So what you can see here, the main takeaway, I would say, is that global data, global evidence is showing that there is important increase in the number of frauds that consumers are facing, and also in the number of cases of data misuse. These are the two, fastest growing risks from what we're seeing globally at SIGAP. Now, the other point is that, unfortunately, women are more exposed to digital financial risks due, partially at least, to their low digital financial literacy. And you can see on these slides that if we take some proxies in terms of like being able to text, and also having financial knowledge, if you combine both, you can see that women are in a much less good position than men, both in terms of texting ability or in terms of financial knowledge. So they are, starting with a, disadvantage compared to men. So this is something we have to keep in mind when we think about regulation, supervision, or capability building for consumers. Now, these are the issues that I've presented, and we've also conducted national surveys, by the way. And I'll just give you two pieces of data which I really find telling. We did two national surveys in West Africa, and we found in Côte d'Ivoire and Senegal, for example, that national surveys, representative of digital finance users, 90% of mobile money users had faced a risk in the past 12 months in both countries. 90%. 40% of mobile money users in both countries had lost money in the past year. So we find this, these national data compared with, in addition to the global research that we have, we find this very alarming, frankly. So we think it's time for a new vision, and this vision is the vision, what we call it, a responsible digital finance ecosystem. And what we mean here is that there's been a lot of progress made by all different actors, but we need a more coherent approach at the country level, where all the different key actors in the digital finance ecosystem work together to solve issues. And when we say work together, that means we call it the 3 C's. So in terms of the actors, you have providers, policymakers, consumers, and market facilitators. And we argue that you need more customer centricity in the framework, more collaboration, and more capability. So briefly, what we mean by customer centricity is that, for example, for policymakers and for regulators in particular, it's important not just to, and supervisors, it's important not just to ask providers to tick boxes. Just to give you an example on transparency, what we have now in a lot of places is regulation and supervisors requiring providers to write their terms and conditions, their prices in big letters. Well, we want to move from that to another approach where we want the supervisor to verify that the customers understand the terms and conditions from the provider. So it puts much more responsibility on the provider to ensure that customers have the right, journey and the right outcomes. So this is why it's often called a customer outcomes approach. So we really want to shift the responsibility from the consumer to the provider to be much more responsible vis-a-vis its customers. Customer centricity also means market monitoring, and I see Indonesia is doing some of this. So we have actually at CGAP developed a market monitoring toolkit that includes a lot of different tools that have been tested already and that can be used to really understand what's happening in the market and take corrective action when needed. So, for example, the national surveys I was referring to earlier, these are phone surveys at a national level, but we will also, in this toolkit, there's a lot of information on how to use each of these tools that are on this slide, with some country cases that illustrates the use of these things. So these are tools that have been used successfully already. And one example that we have worked on recently in India with the, in particular with the RBI, the Reserve Bank of India Innovation Hub, is how can we use social media, for example, to assess consumer risks when it comes to digital credit. I won't talk too much about it, and if there are questions on this later, I can tell you more. But just for the sake of time, I will just say one thing, is that this tool has been really interesting to help us understand the issues that consumers were experiencing with digital credit, which has been mushrooming in India, not always in a very customer-centric way, I would say. So we found, for example, that there are a lot of issues in terms of debt collection practices with digital credit in India. Now, another part that we think is really important is the capability. And we've heard from OJK how all the hard work that has been done on financial literacy. Obviously, digital literacy is also extremely important. So this is obviously one pillar, but also providers. There are many associations that can also help them develop codes of conduct and do a better job in terms of being responsible to consumers. Now, policymakers, that includes regulators and supervisors, also need more resources and training in some cases. So, there is a lot of work that can be done at this level also. And then the final one is collaboration. And collaboration it can be a very, sort of vague word, but what we mean here is more structured collaboration. And we mean collaboration between different types of actors. So just to give you one example of the collaboration we're thinking of, for example, collaboration between a regulator and consumer representatives. So we have like a dozen countries in high-income countries that have set up what they call consumer advisory panels. So it's the regulator that creates a consumer panel so that they have a direct sort of dialogue and ongoing dialogue with representatives from consumers so that they get a better sense of what's happening in the market, how to handle certain issues and all this. So at this stage, it's been mostly in high-income countries, but some emerging and developing economies are also adopting these now. The other types of collaboration are what I call intra-actors, so that's between similar actors. So different regulators, for example, can work together to solve certain issues. In Peru, for example, the financial sector regulator and the Consumer Protection Authority are working to create a common framework, but they currently have two different frameworks to collect complaints and listen to consumers. So how can they work together? We have other examples also where we would like to see more collaboration, for example, between data protection authorities that are emerging in a lot of countries and financial consumer protection authorities that are working on similar issues, because data is being used increasingly for digital financial services, including a lot for digital credit for MSMEs and SMEs, by the way. So now I think I'll stop here and leave some space for others to speak and for the questions. Thank you very much.
Thank you, Eric. It was very useful. I'm going to come back to, I think there's some interesting things in what you said, where I think we can learn from what CGAP has learned, particularly, as you mentioned, the example in Africa, and how that might apply also to ASEAN. I'll get back to you on that. I'm going to turn over to Scott Stewart now. Scott, floor is yours.
Thank you so much, John. Really appreciate your helping us moderate this panel, and I really appreciated the comments from Sarjito and from Eric. I think that we have a lot to talk about in terms of protecting small business borrowers, MSMEs, in the parlance of ASEAN. But I should probably introduce myself first. I'm the CEO of the Innovative Lending Platform Association, and we represent the premium brands in the online small business lending space here in the United States. That would include Fundbox, Bluevine, Lendio, Funding Circle, which is an India international brand that you would probably all recognize, along with On Deck and what remains of Cabbage. And so those companies have spent the last 15 years or so unlocking access to capital for very small businesses across the United States and in some cases across the world in ways that are transformational to our financial ecosystem. We've had recent research that shows that about a third of our loans are going to low to moderate income borrowers, which is a pretty remarkable statistic and an achievement when you're looking at what has happened after the financial crisis in 2008, where many financial institutions simply abandoned very small businesses and no longer serve their interests or their financial needs. So during the pandemic, in particular, the continued transformation of our financial services ecosystem into a digital world was accelerated, as you all know. And if you were an underserved borrower in the United States of America, you received your assistance money either through the Paycheck Protection Program or other outreach programs from a fintech. You got that from a digital services provider, and in many cases from our members directly. And so what we're here to talk about, not just those achievements, but also I think looking at what Eric was just talking about, one of the key pillars that he mentioned was transparency and how critical that was to the understanding of what a small business borrower is taking out in terms of their financing products, their capital and credit products. And so in 2016, our association put together what we call the Smart Box, which is straightforward metrics around rate and total cost. And I hopefully I can find a way to share that on this screen right now. There we go. Okay, can everybody see that? That is our Smart Box, which is we think the best way to showcase all right, we can leave it up there for the moment. A couple of other things I wanted to address before we moved on into the question and answer session. Our member companies really came out of the ashes of the financial crisis. So in 2008, the global financial meltdown caused financial institutions of all kinds to really shy away from small business lending, from high risk lending and small dollar lending. And we did not. We waded into that space and made a huge difference. And so if you take a look at what's happened, particularly low to moderate income borrowers in our view are really finding access through us, where the banks and the larger financial institutions have really left them behind. And if you look at how we're reaching them, it's a surprising mix of the kinds of borrowers you may or may not expect. If you look at an average fintech that's offering small business loans, they're generally offering products to 3 different types of borrowers, and it's about a third and a third and a third for each one. The first is a fully bankable borrower. That's a borrower that is looking for speed and convenience and is not interested in concerns about cost. Then you have another about a third of the borrowers that we're looking at for small business loans are having a hard time finding a financial institution that will serve them. They've applied to a variety of locations. They have a little bit of time on their hands, but have experienced some rejections. They are bankable, but they're looking for access and speed and convenience. And then there's an entire segment of the population that we're serving, about a third of those borrowers that would not be served by banks in any way, shape, or form. And so that is a complete transformation in a financial ecosystem where we're unlocking, again, that word, unlocking access to capital and credit for borrowers that really would not have had that access in the past. And so this is a kind of transformation that's happening globally, as you're all seeing, we've all been talking about during the course of this conference. But in this specific instance, I think it's important to showcase how the industry writ large is trying to leverage transparency upfront. And so you can see that through our Smart Box tool. John, let me hand it back over to you and we can proceed with some questions.
Scott, thank you very much. I remember studying the Smart Box when I put a paper together on responsible digital credit for ASEAN, maybe 7 years ago. So it was always good to see what the industry has done in the United States to kind of get ahead of being responsible in terms of digital credit platforms. I want to open up to the audience for any questions. I have a few of my own, which I'm going to pose to the presenters while we wait on some of the audience questions to pop up. But I'd like to go directly to first to Mr. Sargento. on, I think Indonesia, as I said before, is an example of a country that's seen an explosion in digital credit. You probably have one of the highest, again, being one of the largest country in ASEAN, it's not surprising, but the explosion of the growth of digital credit has really grown very quickly. There were actually about three questions that are related. One is, I think it's really important what Indonesia has done with regard to working with the industry, somewhat similar to the example we saw with the smart box, of working with the fintech lenders to work on kind of industry, not a full self-regulating organization, but basically a self-monitoring organization that works closely with OJK and develop a code of conduct. So maybe you could talk a little bit about that. And secondly, one of the big issues, and I see this all across ASEAN, and I want to bring it up again, illegal digital lenders cannot lend without access to the Google Play Store or Apple, but primarily in ASEAN, it would be Google Play Store. If they're not able to advertise, the ability to reach out to customers is very limited. I know there were attempts to speak with Google to prevent unlicensed, unauthorized lenders from popping up, literally being shut down and popping back up again. And I wanted to find out where that's at in terms of the conversation, because I had understood there were a few changes to Google, but it seems like those are not being enforced. So maybe you could talk a little bit about that and the industry self-regulating efforts, because I think that's useful for what you've done and for the other members of ASEAN to learn from.
Okay, John, thank you for the question. For the first question is basically we really work together with the fintech lenders back in the country who are licensed within OJK. But
right.
The issue is those who are not licensed in the OJK. So we are thinking of that for those who are licensed within OJK, it is easy for us to monitor and also to give attention if they violate the rules or law. And for those financial service providers or fintech lenders, basically, who are licensed, also easy to monitor those who want to borrow money. And the fact in Indonesia, you could see on the news, which is dominate the news is because OJK cannot control the fintech. Basically, imagine this is also the problem not only for the illegal fintech lenders, but also the behavior of the society. Imagine, John, one person in one day, they borrow in more than 25 lenders at the same day. So they don't, they should have known and they should have understood that they don't have a capacity to repay back the loan, but they did it. So this is also, we educate also in any TV interviews. I also educate the society that if you want to borrow, even to those who are illegal, you must pay back. But take a look. If you don't have a capacity to pay back, so never borrow. And we always force them, the society, to borrow only for those who are illegal. Or those who are licensed within the OJK. And how to cope with the illegal thing? I think you mentioned clearly on the how we work together with the Minister of Information, which is to cope with those who are illegal. And in a day, we can close more than 100 illegal one. But again, I told you before in my previous presentation that it show up like mutant in a day, in a day until we close 100, they make up like one more 100 and even more. So yes, how we cope with this and then how we deal with the payment bank and also the Google and everything. So we do a lot of things. And Thank God, John, we have now, as a new law, which is on the new law, we can impose sanction to those who are illegal until ₦1 trillion, which is we will do this in a way that to reduce the possibility for those who are illegal lenders being like mushroom in Indonesia, which is we don't want it, anymore. Thank you, John.
Thank you very much, Mr. Sarjito. I've been personally involved since 2017, both with OJK and more recently with the Ministry of Finance. I'm well aware of the challenges in Indonesia. I'm going to go over to Eric, but I will come back to you with another question. Eric, I know you made a comment here about the differentiation between SME digital credit from consumer digital credit with the different patterns that you're seeing. But I'd also, two other things, so you can explain that a little bit, but there are two other things I'd like you to discuss, and I think it's very interesting. CGAP, I know, has done a lot of work, more on the mobile financial services, but also on the mobile lending in Africa. And this is something I always recommended that I thought was useful for other countries, which is about ensuring not that there's just ticking of the boxes of consent, but as you said, double checking that there's informed consent. There's a way of, particularly when we're talking with the mobile channel, where those terms and conditions are very hard to read on a mobile phone. So being able to present that with the majority of lenders being individual and being able to confirm that people understand that. And I know CGAP has done a lot of research on that, particularly in West Africa. And the other one was really about any examples of consumer advisory panels that you have seen in emerging markets. And the last issue is CGAP has a lot of influence with, around the world. I see Google being, I don't want to blame them, but I do see that their ability to continue to offer opportunities for these illegal lenders to pop back up on the Google Play Store. In a country like Indonesia, they're shut down. The next day they open up again without Google, really even checking, which could be an easy thing. You could just require them to ensure that people are licensed. Otherwise, they can't advertise. It dramatically limits the ability for them, to make use of these channels. So, whether it be that or Facebook, there are just a few big market players where coming up with, working with regulators and policymakers to come up with some kind of international standards, particularly because there's so few organizations to reach out to. Is this something that CGAP's looking at? So anyway, I'll turn it over to you, Eric.
Thank you. Yes, so first, I'll try to be concise. First, indeed, I want to highlight the fact that digital credits can be a very good thing. There are many people who have not been traditionally using credits who may access digital credits. So we have to keep in mind the great opportunity. And I've seen amazing work done in terms of SME digital credit, which is, done by formal institutions using, real, interesting data from entrepreneurs and some of their bill payments or inventory or sales, etc., and instantly almost, providing them a credit that they would never have gotten otherwise. So that, I think, is fantastic. What I don't like at all is a lot of the consumer credit that is provided through some of these illegitimate apps. And we're seeing this in Indonesia, as we've just heard. We've seen this in China. We've seen this in India. In India, there were more than 300 or 400 apps at some stage. With our social media monitoring, we could actually identify even those that were causing harm. So there are ways to actually, find out about them using, artificial intelligence. So in Africa, the difference is sometimes can be blurry. But what I would say is that a lot of the consumer digital credit is not really used for business purpose. A big share of it is used for consumption. So it's kind of a different concept. But anyway, so we have to watch this area carefully. In Africa, the research that we've undertaken at CGAP for the last few years has shown that, in particular with more like the consumer digital credit, there are a lot of issues with transparency. So I was very interested to see Scott's formula, because I'm a big fan of total credit. That's always what I ask when I borrow. What's the total amount of money that I'm going to pay you, my bank? And so I think the APRs and all this very nice, but to be frank, I'd rather know what I'm going to pay as a total. So I loved your fact sheet. I think that's great. So we need more transparency, because a lot of people don't really understand what they're going to pay. And some of the interest rates, by the way, are exorbitant, difficult to evaluate, frankly. But our first glance in India was, we were looking at, annualized rates of 360% or something like that. So very much like, I call them, the loan sharks of the 21st century, in a way. So we're seeing a lot of that. Over-indebtedness also, people who borrow without really, having the capability. But, just to also respond to Mr. Jardito on the, it's not just about the consumer understanding that they have to be careful. It's also for the provider to be more responsible and, ensuring that the customer has the capability to repay. So, which is not always easy, because, you need to analyze data. You may not have a credit information bureau that is, fully integrating the information, but still there is a responsibility for both here. Now, on the consumer panel, I would say that as I was saying, it's mostly been in high-income economies. We have seen one actually in Nigeria, where that was organized by the telecom authority, interestingly. And now we have just worked with the FSCA in South Africa, where they have been collaborating with our help with the UK FCA, and to actually set up such a consumer panel. So it's work in progress, but I'm pretty confident that we're going to see many more countries following suit, because it's not a very expensive process, and it's a very nice first step into more customer centricity for regulators. And on the Google, yes, we have, I don't know how much I can talk about this, but we've been in touch with them, because indeed they are a very important player. They have in India actually deleted 100 or something, illegitimate apps, but they have reappeared after, as we were hearing the same case in Indonesia. So I do believe that they have an important role to play, and I hope we're going to see more collaboration in the future between supervisors and Google, because I do believe there is some potential progress there. So definitely a good point to raise.
Thank you very much, Eric. Scott, to you on the, I really like the smart box terms and conditions, the transparency that you provide. With a lot of the emerging markets, people are lending oftentimes just through the mobile channel rather than, an online. So that kind of a form might be difficult on the mobile channel. So I'm kind of curious how you see that potentially applied in emerging markets. And then I'm going to transition. I've done a lot of work. I know that Cambodia and the Philippines in particular have worked on interest rate transparency with standards for computation of interest rates and making sure that the full cost, a fact sheet of the full costs of borrowing are presented to each borrower. It's still a challenge in markets like Indonesia, where, you know, as you point out, Eric, I've calculated interest rates. I think that they can't exceed 500% was in Indonesia. So we did have even the industry saying that 500% was too low a ceiling. I almost fell out of my seat when some of the industry players brought that up. But you know, again, very short-term credit. You know, I understand the rates are, you know, if you looked at it for, you know, a 30-day loan, that the interest rates look extremely high. But even there, the problem is it's very hard to compare one against the other. So Scott, you know, I'm very curious. You know, this is something that we've had discussions in a number of markets on looking at how to do this on a mobile channel. So maybe you could share a little
Sure.
bit.
I mean, most of our borrowers are actually looking at the smart box on a mobile device. So it's pretty well used at this point for in that way. And I think that, you know, the point is well taken from Eric. The total cost is what's the most important, you know, number here. And perhaps a note on rates. You know, we should lay out how different consumer versus commercial borrowing is. Consumers are borrowing for consumption purposes. They are financing something they're going to use. A business is generally taking financing for the purposes of expanding their business, for increasing revenue, purchasing inventory, bringing on new staff. Those are the general reasons why they're doing it. So they are entirely different. But the rates question is interesting, because if you look at the total costs that we showcase, we feel like it's important. The small business borrower deserves to see not only the total cost of capital, but those rates. And sometimes the rates are going to look crazy. And I'll give you an example. If you're a small business that is looking for, we'll use a round number, that you're looking for $20,000 in working capital, which would be, you know, a modest amount for an additional chair to a barber shop, or you know, some inventory before the busy season. You could see a small business financer like any of my member companies say, sure, it's going to cost you $2,000 over the course of 6 months. Okay, $2,000 gets me $20,000. I'll do that deal every day. I understand that. So as a small business borrower, I fundamentally understand that. Now, if I pay that back once a month payment over the course of 6 months, it's like a 47% APR. If you pay it back on a weekly basis, that same $2,000 is like an 87% APR. If you pay it back on a daily basis, that APR is in the 300%, something like that. It's still the same $2,000 you're going to pay for your $20,000 over the course of a 6-month period. But the rates vary based on based on how rapidly you want to bring it back. And one of the interesting, I was listening to a panel not long ago that said we should all be so lucky that we have 1,000% APRs, because that means that we're paying it back very quickly. We're paying back the working capital that we're taking out very rapidly. Anyway, so I think that there is mobile application for the smart box and for transparency initiatives all across the globe. I think that's, and smart financiers should be providing this type of information to their borrowers.
Thank you very much, Scott. I think
Sure.
I completely agree with the total cost. As I brought up the example in Indonesia, I think one of the challenges is being able to, allow for comparisons across different institutions. Oftentimes, the amount may be deducted up front, the interest being deducted up front, and the amount that the person gets. It may look like the same, but oftentimes they deduct the interest right up front. And in some of the cases in Asia, I've seen where it's deducted up front, and then you pay whatever the remainder is, and that's the total amount. So that, of course, changes the amount that you've actually got to borrow when you have deductions up front. So those are some of the challenges we see. And you know, I want to get back to Mr. Sargito. You know, this was an issue that we discussed before. We know two issues. One is, you know, around the interest rate transparency issue, being able to have a standardized approach, making sure that the total cost of borrowing, and again, how much is deducted, and just as you've seen in the Smart Box, is this something, you know, again, so that people can compare, if I want to borrow and I can look at four or five different sources to see what's the best one for me, as well as looking at what the effective rate is. Particularly, I think it's important when you've got you know, these front-loaded charges, as we've seen of some players providing, just to be able to make a comparison. Is this something that OJK is looking at? And secondly, the other issue for OJK is, I know that the Legal Aid Society, when I was there, Legal Aid Society was a bit of a challenge. They had, I think, very carefully documented, you know, tens of thousands of complaints, primarily illegal lenders, but they were categorizing these incidents and the types of incidences. So as they were probably the most outspoken representative of the consumer groups. Is this something that OJK is potentially looking at, more close collaboration with consumer groups like the Legal Aid Society, as brought up by CGAP as well?
Okay, John. Of course, OJK really looking at the interest rate that provided by the fintech lenders. So we really rule out that, you know, for those who are giving a credit to the consumers, they cannot the burden more, for example, more than 100% of credit that given to the consumers. So this is the thing to compare that. Actually, this is one of the things how to battle also the illegal lenders, which is basically if you borrow, for example, 1,000, then you have to pay back like 10,000 and even more. That those of the complaint that come to the OJK many times, not only because of the way how they treat the consumers, also collect the money via phone and embarrassment in the social media, and also to everybody on the phone booth, but also on the number of credit that actually multiply. But be really strong on this one. But again, we only rule out for those who are licensed within OJK. So we cannot basically control whatever illegal lenders, which is, as you mentioned on the discussion, even we try hard to do cooperation with the and everything. It's just not easy because for me, now is the fraudsters can do not only like in the past, it's only in the earth, but now in the earth and the sky. So it's very easy, and digital literacy, Indonesian society is a thing, and also the need for them. Even if they realize they still borrow, they realize that they cannot pay back, and they understand that this is illegal, that they still borrow. I tried to learn about this P2P lending in the past. In one occasion, I went to ASEAN in Australia. I couldn't find any one of them. So this is what the like mushroom is here in Indonesia. I think I don't know another jurisdiction how big is the issue of the illegal lenders. And I forgot the second question, John. Still mute, John. I'm sorry. You are still mute.
It was about the Legal Aid Society and whether or not you're looking at more closely working with them as kind of the example that Eric brought up of consumer groups.
Okay, so basically, we don't have, a group who are clear enough on the shareholder activism, like shareholder activism, a group of the complainers, but some of the complainers actually also, we receive lots of complaints, but like debt restructuring, which is actually on the discretion of the financial service providers. But some of the complaints, as we evaluate day by day, and also in a massive evaluation, some of them also are naughty consumers, and but again, we also listen to them, listen to the society really comprehensively on the true complaint. As I probably forgot to mention to you, like we really taking care of the basic clause on the contract of the financial service provider. Why then we have to jump into it? Because as a regulator, we are the only party who can get into this. So like under your previous question, so within that, so we could understand if the fairness of the contract between financial service provider and the consumer is really over there. But then we also learn from the complainers on what they are complaining. So we also work with the industry, and now we issued rule before we oblige them to educate to the, not selling the product, but educate to the prospective consumers once in a year. Now we push up for them, the financial service provider, to educate for the prospective consumer twice in a year. Of course, they got complaint, and we still cannot control if they do really selling a product or educate them. So this is also the issue. So in the field, so we are going to monitor and taking a sample. Is the financial service provider really conduct the education to the society or not? And again, for those complainers in the new law, they can have an association of those who are, consumer complaint, consumer, advocate. So we have also what you call the a group of people who sometimes talk on behalf of the consumers, but as we evaluate also, some of them are right, but some of them are not right. So it is becoming not easy. So we really do a strike of balance between the growth of the financial service provider and also the complainers. So the right of the consumers, not complainer, the right of the consumers. Why then we need this? Because some of the news, sometimes even I was interviewed and asked to interview by TV and other medias that on the debt collection activities, for example. But basically, as we get into going to deep enough to investigate why then the news is so wide, but actually the fault is also on the complainers, and even I said to them, even in the TV, if the consumer don't want to meet harsh debt collectors, so see the contract carefully, and then fulfill the commitment. Then you won't see the debt collectors, which is harsh and even sometimes is violate the criminal code. Thank you, John.
Thank you very much. I'm going to wrap up now because I know we're over time, and I really appreciate particularly our panelists, Eric and Scott, who have joined us late at night, like myself from the United States. So again, I'd like to thank all the panelists. Mr. Sarjito, I think, OJK is a good example for others in ASEAN to learn from, particularly your work with the industry the FinTech Lenders Association to work on a code of conduct and to address these issues. I think the work you've done on the whole education of financial literacy is well known, and I think there's some good examples for others to learn from. So thank you very much for sharing that, and I'm happy to see that OJK can now has the legal right to go after the illegal lenders, which is came about because of the new omnibus law. Eric, thank you very much for sharing with us the ongoing research that CGAP, research and work that CGAP is doing. Really would like to see more. I'm sure that ASEAN, who will be working on these issues this year in particular, will be interested in learning. I know CGAP is very good at sharing news and examples and recommendations. So this is, I think, that whole work of the collaboration, the 3 C's, as you mentioned, is very important for all of the policymakers who are with us, as well as the providers. And of course, those funders and others who are facilitating or providing support to the industry. And lastly, I wanted to thank Scott. I think Scott Stewart, who joined us as well, sharing what the industry can do as an association. I think that the Smart Box is a really good example, and one that I would love to see other industry groups across ASEAN to adopt. Really appreciate your information, and I think we can put the information of the Smart Box. I know there's links to it for the others. So I'd like to thank all the panelists. I'd like to thank our hosts at the Ministry of Finance. Of course, OJK was helping with this, and the representatives from ASEAN. I think this has been a very informative panel, and thank you to all our panelists and those participants who were with us today. Thank you.
Thank you so much, Mr. Owens, the moderator. But before we close this second panel session, I would like to invite all of the panelists as well as the moderator to have a photo session for a while. So if you don't mind, please looking at your camera on your devices, and we'll be able to capture your picture, all panelists and also moderator. On 3, 2, 1. Well done. Thank you so much, ladies and gentlemen. Let's give a round of applause to all of the panelists and also the moderator for the second session. Thank you so much once again to Mr. Owens. Well, now, ladies and gentlemen, before we continue with the last part of this session, we would like to invite, for those of you who would like to maybe move a bit to the front sides of this chair, which are still available, you are welcome to do so. But if you just remain on your positions or on your comfortable zone right now, it's okay, because now we still have one more program for this high-level dialogue. That is the closing remarks. So without further ado, ladies and gentlemen, we would like to give the floor to the Chief Executive of Market Conduct Supervision, Education and Consumer Protections of OJK Indonesia to deliver her closing remarks. To Ibu Friderika Widyasari Dewi, please.
Your Excellency, Minister of Finance of the Republic of Indonesia, Ibu Sri Mulyani Indrawati, ASEAN Working Committee on Financial Inclusion Co-Chair, Ms. Malini Savana, our distinguished panelists and moderators. From session 1, we had Mr. Safriadi from Ministry of Finance Indonesia, Mr. Ritwik Ghosh from Grab Singapore, Mr. Tampi Koshi from ONDC, Mr. Boma Karaheng from National Bank of Cambodia. And from session 2, we had my colleague, Mr. Sarjito, Mr. Eric Duflos from CGAP, and Mr. Scott Stewart, and also the moderators, Mr. John Owens, notable representative government agency and financial services industry, esteemed officials from ASEAN countries, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. A very good morning, good afternoon, good evening to all of you from wherever you are. It is my great pleasure and honor to join you for the closing session in the first day of the high-level dialogue on promoting digital financial inclusion and literacy for MSMEs. On this occasion, I would like to thank Ibu Sri Mulyani Indrawati, all the ASEAN Finance Minister and Central Bank Governors for their collaborative work to make the ASEAN Finance Minister and Central Bank Governors meeting 2023 a successful one. I also greatly appreciate all speakers and moderators and all participants and also the organizer on running this seminar very well. As we all witnessed from this morning, this seminar has become a valuable forum for exchange views, perspective, and international best practice have also been captured. This is implementation of our commitment to developing digital financial inclusion, financial consumer protection, as well as financial literacy for MSME. On behalf of OJK, it is indeed my pleasure to make a few closing remarks and express gratitude to all of you who made this event happen. Honorable guests, ladies and gentlemen, financial technology is all around us. Based on January 2023 data, there are 77% people actively using the internet in Indonesia. In addition, there are more than 350 million registered mobile numbers, or around 128% of the total population in Indonesia. With these numbers, digital financial innovation is recognized as a promising tool to promote financial inclusion. It offers the opportunity to extend the potential reach of financial services and become digital alternatives to encourage consumers to exit the informal sector. In addition, it brings more convenient, faster, secure, cheaper, and timely transaction. For sure, digital financial innovation is a critical instrument to achieve global financial inclusion. On another note, MSME are one of the backbones of the Indonesia economy. They absorb a high proportion of the workforce. In 2019 data, MSME employed 120 million workers, or around 97% of the total workforce. This high proportion of workforce is directly related to the number of MSMEs, which reach more than 60 million units or 99% from the total business units and contributed around 60% of the Indonesia GDP. Despite dominating the economic structure, however, the level of financing for MSME is still very low. Loan disbursed to MSME from banking sectors are around 21% from total outstanding loan. This situation is ironic now, given the fact that MSME is a very potential market for financial industry. I personally believe, given their central role in Indonesia economy, as well as devastating consequences of COVID-19 pandemic for MSME, digital financial inclusion for MSME must be further developed. Honorable guests, ladies and gentlemen, in the first session of this conference, the panelists have shared overview of digital innovative financial products and services for MSMEs. Indeed, digital financial innovation can be a great tool for MSME development and empowerment due to its important role in providing innovative payment and finance for MSME. Digitalization in the financial sectors may come in many forms. Aside from peer-to-peer lending that is very well known and securities crowdfunding, there are many newer fintech business types emerging in the market. For example, the digital platforms such as Grab and ONDC have an essential role to support MSME to stay in the business. It will bring positive impacts in providing job opportunities for MSME in a way that digital platform help MSME to reach potential buyers as well as outreach beyond the cities of location of the FMSE. Surely the presence of financial innovation is a blessing to Indonesia underbanked population and become a bridge that allow MSME in need to gain financial access. OJK is very committed to provide support and building a sound ecosystem for digital financial innovation. We will continue to simplify and provide alternative financing for MSME by stepping up digitalization in various financial activities. We will expand what so-called credit against loan shark program to support MSMEs, which has been successfully implemented in 78 regions through TPKAD program, reaching almost 1 million debitors with 26 trillion rupiah financing value. We will optimize the role of the Task Force on Regional Financial Access Acceleration, or TPAKD, that I mentioned before, and further development of generic financing models in accordance with the characteristic of MSME. Honorable guests, ladies and gentlemen, it is important to note, however, that the development of digital technologies also become a new challenge for certain communities. It makes financial markets more sophisticated. Even simple financial products such as saving account are now offered in variety of forms for retail customer. This digital evolution, as well as the interdependency and globalization of finance system, may have negative consequences, however, if they are not well regulated and managed, of course, not only for MSME, but also of the long run and the stability of the financial system. Therefore, there is a need to keep the balance between financial innovation and financial consumer protection for MSME in this innovative environment, which become main topic in the second session. Digital financial product for MSME must follow consumer protection principles. They are, first, it must be fully transparent, not only promoting the good aspect, but also disclose all information on cost, obligation, and most importantly, the risk. The second one, there must be a fair treatment in making agreements with MSME. For example, the product cannot change price and rates at any time without prior notice. The third, digital financial product must have the reliability, both in fulfilling the promise to give MSME their rights, as well as to maintain system reliability. And it must maintain the confidentiality of the data, and also digital financial product must have unit or function that can handle complaints and resolve consumer dispute. We must keep the balance between the risk and the benefit of financial technology innovation by providing a fair and proportionate regulatory framework. The framework must be fair and establish level playing field for both market participants. A well-designed framework will stimulate the willingness of financial industry to innovate in digital financial products, at the same time can generate consumer trust and confidence. Therefore, we welcome the law on the development and strengthening of the financial sector as the umbrella to keep the innovation on the right track. Honorable guests, ladies and gentlemen, strong digital financial inclusion and credible financial consumer protection must be followed by adequate digital and financial literacy for MSME. It is important because growing digitalization is not necessarily matched with MSME digital financial literacy levels. Improved access to digital financial services for MSME requires higher level of digital financial literacy to make effective use of them. Higher literacy is also important to avoid mis-selling, frauds, unauthorized use of data, discriminatory treatment, and behavioral issues such as excessive borrowing. Therefore, OJK put educational program as a top priority. We develop learning management system and provide financial literacy materials through educational website, mobile apps, as well as through social media platform. Honorable guests, ladies and gentlemen, the importance of digital financial inclusion, financial consumer protection, and financial literacy for MSME is globally acknowledged. Indeed, improving financial inclusion, financial consumer protection, and financial literacy for MSME have been a policy priority in many countries and become a global movement. However, it is important to know that those works are our shared responsibility. Submission is going to be successful as long as all stakeholders give adequate intention and work in their proper fields respectively. I believe this conference provides great opportunity and valuable knowledge for all of us, and how it could help accelerate economic recovery and make financial industry more sustainable and inclusive in our respective jurisdiction. Having said that, let me conclude my remarks by once again offering my sincere thanks to Ibu Sri Mulyani, Indonesia Minister of Finance, and all ASEAN Finance Minister and Central Bank Governors, our honorable guests, speakers, moderators, and all participants. I wish you all good luck. I certainly believe that together we can contribute to the development of financial literacy, financial inclusion, and financial consumer protection for the growth of MSMEs and the welfare of the people. Thank you very much for your attention. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you so much to Ibu Friderika Widyasari Dewi, the Chief Executive of Market Conduct Supervision, Education and Consumer Protections of OJK, for a nice words during the closing remarks. Well, distinguished delegates, ladies and gentlemen, by this we have reached the end of our high-level dialogue. We thank you all for being here, for your active participation and also your valuable contribution. However, before you leave this hall, we would like to remind you that tomorrow we will have our workshop on promoting the digital financial inclusion and literacy for the MSMEs that will start earlier at 8 a.m. local time. So please make sure you will also join us for tomorrow's workshop. Ladies and gentlemen, we also have provided you with the QR code, which will be displayed on the screen. So please just scan the QR code to get the whole content of this high-level dialogue. And you may also access the feedback form in the QR code. Please kindly fill in or complete the whole questions at the feedback form, because you'll be able to redeem your certificate of this high-level dialogue by completing the feedback form. And ladies and gentlemen, for those who would like to enjoy lunch are already provided at the Pecatu Free room, and there will be signage, of course, to direct you to Pecatu Free. So please also stop by at the exhibitions area that will showcases the MSMEs and also the creative economy products at the lobby hall area of the NDCC 1. I'm Diana Riswari. On behalf of all of the organizing committee, would like to thank all of you once again, ladies and gentlemen, and don't forget to always enjoy your time here in Bali. Have a great day, and Om Santi 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 Om. Wassalamualaikum warahmatullahi wabarakatuh.